Good morning, everyone. I'm Patrick Fross with Fross and Fross Wealth Management, and welcome to our market update video for the week of June 3rd, 2024. Remember that nothing said here is to be considered a recommendation, and please review the disclosures in the email to which this video link was attached, or if you're watching on social media, please go to frossandfross.com. Well, May is behind us, and we're now entering the last month of the second quarter of 2024. There's an old expression, sell in May and go away. And I think this year epitomizes why it's not wise to follow the old logic. In April, the S&P declined 4.5%, and some investors took this as a signal that this was the long-awaited correction. Or for the pundits of pessimism, they thought that this was the start of the crash that they had been predicting. But lo and behold, May came and went, and instead of continuing its downward trend, the S&P 500 and the NASDAQ indexes were up nearly 7%. So what gives? Well, this continues to lend support to our strong belief that it's nearly impossible to time the market. If we look back in history, going back to 1980, the market was up 75% of those years. But in all fairness, it was down 25% of the time. And a few of those were pretty painful, especially for those taking large withdrawals from their portfolio. But time and time again, we can look back on history and see that the equity markets are the best place to be in the long term to make money. But the market's not for the faint of heart, and we're not suggesting that you put all of your money in equities. But we are suggesting that if you want to stay ahead of inflation and have long-term growth prospects, your long-term money should be allocated to equity markets. What about short-term money? Well, we know that 25% of the one-year rolling periods going back to 1980, the market was down, which causes what we call sequence of return risk. And that's when someone has to sell in a down market in order to fund their lifestyle. And that's something that we all need to avoid. So how do we avoid sequence of return risk? Well, at Fross and Fross Wealth Management, we are neither prognosticators nor do we have a crystal ball. But what we do have is historical precedent and math. We know that over the last 94 years, every 12-month rolling period, the market is negative 27% of the time. So what does that tell us? Well, it tells us that short-term money that you need in the next 12 months, should be conservatively allocated. And the silver lining with rising interest rates is that you can now make at least 5% in risk-free assets. In a 3-year rolling period, the market's down about 16% of the time, but over 10-year periods, the market's only down about 6% of those periods. So again, this tells us that short-term money should be conservative, money that you need in the next 1 to 3 years, and money that you're not going to touch for more than a decade. If you want to grow that money, and I think we all do, should be more aggressively allocated and probably should be in equities. Now, every investor's appetite for risk is different. And when you meet with us, we can talk about your appetite for volatility and how much of the ups and downs that you can stomach. But it's not a market correction that causes a problem with the portfolio. It's having to sell assets when the market's down, because then you have fewer shares of those assets in order to recover. And the market has always recovered. But the other issue is whether or not you're going to panic at the bottom and go to cash, because if you do that, history has shown that you'll never recover from those losses. So if you haven't done so already, think about your appetite or your ability to handle the ups and the downs in the market. If you have assets for the short-term income needs protected and low-risk assets like money market, CDs, treasuries, and protected structured notes, and if you're willing to see volatility in your longer-term money because it's allocated more aggressively to equity markets, history has shown that you will be a successful investor. At Fross and Fross Wealth Management, we take our responsibility very seriously. We are the guardians of your wealth, and we never want to see someone run out of money. We will do everything in our power to protect your assets while still helping you achieve your goals. Well, I'm Patrick Fross, signing off for the week of June 3rd, 2024. Have a great week, everyone, and remember, it's not timing the market, it's time in the market.